Hey everybody, it's Pete. How's it going today? Hope you're having an awesome weekend. Welcome to a new episode of the best stock picks for the coming week, which is June 28th, finishing up the month of June, which has actually been a pretty darn good month of trading. The market finally caught a bid after getting beat up pretty good last week. 5-day rally into new all-time highs for the S&P 500. Question is, now what? Are we overbought? We're using that question on the other side of the market, and this is the biggest challenge that most traders have, is buying too late, only going into that list of seeing what the biggest gainers are and then getting involved way after the fact, putting on that trade, and you're like, oh my gosh, every time I put a trade on, it moves against me. Maybe it's not the idea. Maybe it's your timing, which means tape reading. We're actually going to cover something else today. I've been really asking for a favor, which I really appreciate. It's, what are your biggest trading challenges? And to let me know in the comment, what do you think are the reasons that are holding you back from being the stock trader and seeing your account go higher and higher and higher with predictable account growth? What do you believe is holding you back? Right now, actually, I'm going to review a list that we've compiled so far. So if you're watching this now and you're struggling, if you're watching this right now and you know deep down inside of you that there is a higher level that you can get to, leave a comment below. Let me know what you believe is holding you back from bigger, more reliable, more predictable stock trading success. And I'm going to review the questions that we already have now, the roadblocks that we already have now. Then we're going to make our way into analyzing and predicting what we think is going to happen for the stock market coming up. And we're going to finish up with my top 5 picks for the coming week. Remember, we have a 3-day weekend this week. If you happen to not be in the United States right now watching this, which, first of all, thank you. I really appreciate that. If you could do me a favor, please click down. Thank you for subscribing. Hit that alert button, and don't forget to leave your comment. July 5th, the stock market is closed. So we're actually heading into a 3-day weekend where next Monday, July 5th, the market is closed. So stick around. We'll be back in 2 seconds. Okay, unfortunately, as I said every day, we actually have to put up that disclaimer. If you see a WhatsApp request or WhatsApp number in the comments, ignore it. I will never, ever, ever post a WhatsApp number. There's people impersonating me. Ignore them. Do not give anybody your number. I promise you, it is not me. So what we're going to do is we're going to head straight over. I'm going to first, before we get into the market and the predictions, I'm going to do a little PowerPoint here, and we're going to discuss, and raise your hand or leave a comment if you can relate to some of these challenges. And if you have a different one, leave that in the comment, because I'd really love to hear from you, because we're going to be doing a webinar soon, and I'm going to address how to solve all of these problems on the training that we're going to have that's coming up. So first and foremost, let's head on over the top trading roadblocks, and from what we're seeing so far, what are the common obstacles to trading success. So starting out, number one, obviously this is for educational purposes, is I'm overwhelmed, I'm confused, there's too much information. So how do you overcome this, and why is this a problem for quite a few traders, quite honestly? And the number one reason is you don't have a trading plan. The number one reason is you don't have a trading edge. I want you to remember this quote, maybe even write it down. If it's hard to find, it's not there. But the only way that you will ever know if it's hard to find, it means that you're looking for something in the first place, which means that you need to have a trading strategy. And a trading strategy, or an edge, or the reason that we choose to accept risk, is because we think that the stocks are going to move in a particular direction. So it makes accepting the risk worthwhile. But if things are overwhelming to you, if you're confused, if there's too much information, it means that you need to simplify what you're looking for. And the way that we do it is we're looking for the smart money, we're looking for the order flow, and then we read the tape to get good entries and exits. So the number one priority, anytime somebody comes into our community, and this is a problem, I'm going to put that back up on the screen, is overwhelmed, confusion. The first thing that I coach somebody through is getting very clear on what great trade ideas look like. And it's only one thing you need to understand, and that's order flow. You need to understand how to spot the smart money. There's nothing else matters. The entries, the exits, money management, all of that. None of that matters if you don't first understand how to spot the smart money and then learn how to piggyback on what they're already doing. And look, I'm going to go through a whole list here right now. Obviously, I appreciate it greatly that you're watching me right now on YouTube. If you want to get a peek for 30 days. Click the link below the video and just find out what we do in the community. And if you want to take the next step, I'd love to see you on the other side. If not, we're gonna discuss some more right now. Okay, so first is identify order flow. Keep it simple to look for one thing, smart money. That's the only thing that reduces and eliminates all of the confusion. Number two, I'm afraid to lose money. I'm trading scared. This is two things. This is a symptom of two different problems. If you're afraid to lose money, that means that you have not accepted the fact that there's a possibility of a loss. Remember, risk reward is how trading, the foundation of trading. You know what? I'm going to pull this up in a little different way here. So remember, if you are afraid to lose money, you need to, very first thing you need to say, okay, I am willing to risk $100 on a trade because I believe over time I will make more than that, typically 3 to 1. That's how you eliminate the fear of losing money. You think in terms of risk, reward, and probability. If you're trading scared, that's a little bit different than being afraid to lose money. Trading scared means that you don't believe in your edge. And the only way to really believe in that edge is to trade it over and over and over again. But the challenge that I see with far too many people is they try to learn with too much share size. So if you're scared and you're afraid to lose money, simplify, which is the first thing we discussed, and then get back into lower share size. Put on a trade and get feedback. Put on a trade and get feedback. And that's where you start to develop the habit of being comfortable with accepting risk because you have a strategy that over time produces winners, which actually winners are going to be one of the things we're going to talk about next. Okay. So holding my losers too long, freezing up in losing trades. Now, this is one that is critical. Critical, because we're all okay. We opened up an account. We can't wait to put a trade on. We have no problem putting on a trade. But maybe if we put it on, we hesitate. We're afraid, like we just talked about. I don't want to lose money. I don't want to lose money. Holding your losers too long is one of the cardinal rules of blowing up your trading account. And really, honestly, as much as your trading account, ruining your confidence. And here's how you get over it. And I promise you, if you hear nothing else from me, this is by far the most valuable lesson that I could offer to you based on my years of experience. You need to accept the dollar amount of the trade prior to the trade. Raise your hand right now if you've ever put a trade on and just as like it got here and like just got close to your stop loss and you're like, I'm just going to give it another 50 cents. I'm going to give it another $1. I'm going to give it another day. You move it from where you accepted you were going to take your loss in the first place. That is horrible trading. That means that you never accepted the fact that there might be a loss prior to the trade, and that means you turn reasonable losses, acceptable losses, part of your trading plan into a much bigger loss. So here's how you get over that. Write this down. Again, I talk about all the time. We have the magic legal pad where everything is. Write this down. A trading loss is a business expense. That's it. A trading loss is an expense to run your business. It's up to you to keep those losses reasonable, to keep those expenses reasonable while you're learning to grow your business and build revenue. So you have expenses to get the business off the ground, some losses, some software, some losses, maybe some small losses, while you're learning to develop your edge, while you're learning to find order flow, and you get to the other side, you're no longer afraid to place a trade because now your revenue is a part of the business. Your expenses are a part of the business. And now you're just running your trading business like any other business flawlessly without fear, because every single trade, and I'm just going to pull this back up on the screen, there's no reason to hold a loser longer because prior to putting the trade on, you said, I'm okay with risking this dollar amount. If it goes down there, that means that this entry didn't work out. I'll look for another entry, but that's an accepted part of trading. So stop right now. Get your ego out of the equation. Say, if I accept, and I'll just use a number, if I accept $300 loss on the trade and it goes down to that level, I'm just going to get out and go to the next trade. I accepted that as a business expense, which takes us into the next question. I'm in the wrong stocks and I'm making the wrong entry. So we're going to come over. Let me move over here. I think I can't tell. I'm looking into the screen. The wrong entries and the wrong stocks. The wrong stocks, first, go back to the very first obstacle. These are kind of tied together. Once you understand order flow, once you understand sector rotation, which we're going to obviously talk about here again today as well, once you understand sector rotation, you immediately start to understand what the right stocks look like. So that's the first thing. We can eliminate that immediately, put you in the right stocks that have the highest probability of following through simply by understand how to follow the order flow. Everything comes from following the order flow. This is the second part, though. The wrong entries simply mean that you have not learned tape reading yet. Tape reading means if this is the line in the sand, if this is the level that you're reading the tape, how close to or far away from the optimal entry and the ultimate profit target are you right now? So you need to know, what does the stock normally do? If the stock normally moves $10, I'll just use an example, and you pull up the gainer list and, oh my God, I got to get involved in Virgin Galactic, which exploded last week. It's not the time to put on a new swing trade. It's too late. Those little things keep money in your pocket, because raise your hand if this has happened to you. Put a trade on. As soon as you put the trade on, it moves against you, goes down a little bit, stops you out. You're the disciplined trader. It stops you out exactly where you said you were going to. You get out of the trade, and then it flies and it runs without you. I used to do that. You know, I stopped doing that because I understood to read what the price of the stock normally does, and we build that argument by understanding how to do tape reading. Tape reading is the optimal entry, the optimal profit target, or the ultimate profit target, and where are you right now in that window? Are you here where there's plenty of room to go, or are you here where you ate up all of the potential already and your entry is wrong? You're going to get stopped out, lose all of your confidence, have a losing trade, and feel like you can't do it. You have this. It's just a question of understanding timing. All right. Now, these are all your obstacles. I'm just reflecting back what everybody, and I went through all these, trust me. Next is exiting winners too soon, and then you watch it go without you. This is where order flow, again, comes into the equation. You're going to see order flow works as kind of like the core foundation of everything. How many days of conviction do you have in the trade you're about to buy, in the stock you're about to buy? Did it go up yesterday? Was it, put it over here, is it one day? Did it go up for 2 days? Did it go up for 5 days? Has it been going up for 2 weeks and closing on the high week after week? Has the smart money been paying higher prices from 1 week to the next? Matter of fact, have they been doing it for 2 months, or did it just happen yesterday? Are you trading with 1 day of order flow or 2 weeks of order flow? The difference between those scenarios, which again all comes back to order flow, tells you exactly how to know when to exit your winners sooner, because that's what you should be doing. Remember, we just talked about optimal entry and ultimate exit, right? When you have plenty of room, you exit and add, right? If you're all the way up here, you exit sooner because that's all that's left. But if you enter down here and it goes to here, you're like, okay, there's still plenty of room. This is where you add instead of getting out. And knowing that difference is how you make more on your winners. Okay, so exiting your winners too soon also comes down to understanding order flow and reading the tape. Okay, and I believe that was the last one. Let me just confirm that. Yeah, that was the last one. So those are the biggest questions and obstacles that we're going to review in an upcoming webinar that we're going to have. That's just kind of scratching the surface of what we're going to look at. So we're going to shift over now into both the market and sector rotation. Now, what's uniquely interesting about the sector rotation right now is the fact that the stocks that were the strongest last week from a sector rotation perspective, I'm going to say this kind of in a strong way, they're actually lying right now. We have some market rotation where the market came off. Market got smacked, had a really good week last week, and some of these stocks that were beaten up, also the news, the infrastructure news got beaten up, had a really good week, rose to the top of the list, but the majority of the stocks there are kind of nowhere. They're kind of still in bearish order flow. They woke up last week. It's kind of the start. Remember what I just said a minute ago about how many days, weeks, or months are you trading with? So the sector leaders that we had coming into and ending last Friday, heading into the week of June 28th, it's a little deceiving because they just woke up last week, but they also had bearish order flow, or they're still stuck in the middle of nowhere. So this means that the week of June 28th, we have to be buying stocks and picking stocks on a stock by stock basis, because the bigger picture is either overbought, where we are. Again, I want to use this as a model for you to have in your head. If this is the profit potential that we're willing to accept, and last week, if we use this as an example, the market is all the way up here for what it normally does, and we've gone 80% of what we normally do in a lot of these stocks. You now need to find stocks that paused, and you can't chase last week's price action. And that's what we're going to do today. Remember, one of the biggest obstacles that we just covered was buying at the wrong time and exiting too soon. That's what we're going to talk about today, is getting involved at the right time so that there's plenty of room to go. So this list of sector rotation is kind of interesting because energy had a good week, but only one really big stock broke out, and that one pulled right back in. So again, not the greatest opportunity, despite the fact that it's near the highs. And this is the difference between somebody who's just scanning for ideas versus somebody who's digging in and saying, I'm going to find the money. I'm on a treasure hunt. Basic materials, the same thing. If we take a look at some of the basic material stocks, which we'll actually do right now, they came off the mat. However, infrastructure plan helped them. But if we take a look at them, they're not screaming to the upside. As a matter of fact, if we take a look at Alcoa is actually still in a downtrend. Alcoa is still showing lower highs, lower lows. The infrastructure deal, absolutely exciting. However, go to FCX. Okay, still in a downtrend. DOW, still in it. That's actually a bearish setup right there. Rio, which was a bullish gapping machine last week, still in a downtrend. So what's the point that I want to get across here? The point that I want to get across here is very simple. We need to get a little bit more specific to the ideas that are going to move this week. These stocks might need to go into our tracking journal. There's the trading plan, which is the stocks we're trading today, and the tracking journal of stocks that are setting up and then looking to give us an idea. So we're going to work our way away from the sector rotation right now because it's obvious, but not setting up awesome ideas. So if we keep working our way across the board here, energy stocks, maybe one or two are breaking out, but they've gone too far the last 5 days. Basic materials are in bearish order flow. Financials are interesting right now. If we take a look at, let's say, for argument's sake, Goldman Sachs, okay, smashed for the most of June, rallied last week. Good comeback, but does that make it a great idea? No, it's bearish order flow for the month, but rallied 5 days of momentum. Interesting, maybe for a short-term trade, but order flow is not there yet. Same thing with Morgan Stanley. Same thing with Citigroup. Same thing with JP Morgan. So where is the money going into the financial sector? Well, now we work our way over into credit cards. Visa, near a breakout level. MasterCard, also near a breakout level. Discover Financial, near a breakout level. That one might be a little bit past the optimal entry. Probably going to need to pause up in this 125 area. And then Capital One. So do you see how you need to dig in just a little bit deeper than just running scans and saying which ones are up? Remember, you could find something on that list, but if this is what it normally does and you pull it up and say, oh my gosh, the scanner for the week, this was one of the biggest stocks for last week. If it used all of what it normally does, or 80% of it, you're going to be risking $1 to make 50 cents. That's not going to make you a great trader. That's going to make you a break even to slightly losing trading. We have to keep learning how to time the entries, find the order flow, time the entries, find the order flow, time the entries. So working our way over into what do I think is going to be moving this week? Solar stocks lit it up. And I'm going to talk about the first three solar stocks that I believe are still going to have a good week this week, which is ENPH is one of them. You can see again, we're not going to chase this one. It actually finally broke out. That's a good sign. Next, we're going to work our way over to JKS, which had earnings last week, and you can see how it reported. So we're going to be following this one as well. But the one trade that I'm going to be watching, and I'll mention this one a little bit, is Run. We're going to work our way over into another sector, and we mentioned Tesla last week, which was a big, big idea. We actually said 700 was the area we're expecting it to get up to. Came within $5, maybe a little bit less than that, and paused. So now we're looking for Tesla to pause maybe for a day or two before making a run to the upside. Working our way over into the other electric vehicle stocks, specifically the Chinese electric vehicle stocks. NIO, kind of pausing right here. XPEV, stuck in the mud since it came up with that news, right? $2 billion offering on the stock exchange. The one that I am looking at LI. LI is now comfortably resting and holding after going parabolic. Those aren't my top five. We're actually going to get into that right now. One thing to keep in mind as well, again, working our way over into the sector rotation for the week, consumer cyclical. Nothing exciting here, right? However, Nike has to be one that we pay attention to. Nike exploded into all-time highs. We're not going to buy it on that kind of a move. We needed to pause. We need to put in our tracking journal and then set up another move for after that. Abercrombie and Fitch. Again, these aren't massive momentum stocks, but when the sector, the industry group is seeing order flow, it's something to notice. These are a little bit beyond the optimal entry, but now they go in the tracking journal and we start looking for entries for swing trades a little bit later in the week. So Nike, Abercrombie and Fitch. CarMax, consumer cyclical. Look at that gap after earnings. Dick's Sporting Goods with the world starting to get back outside. Okay, you see we're starting to work our way over, and Yeti as well. So what am I walking you through right now? We're walking through the concept of tracking and following the smart money, combining that with tape reading so we're not getting involved too late. So now we're going to shift over, and these are going to be the top 5 stocks that I'm going to be watching for this coming week. And again, one thing I want to point out, and I'm very particular about talking about this, is that most of my entries, I want them to be moving in my favor before we put the trade on. I already have the order flow. I'm waiting for the stock to pause and moving in my favor. I want to get in while it's moving in that direction. And this is something that we talked about last week in Snow, where I said clearly I want to set an alert for above 250, and then when it gets above there, I'm going to evaluate it. Got above 250 and came back. Got above 250 and came back. So I'm not even in the trade yet. That's the difference between a buy stop, it gets up to that price I want to get in, versus an alert when it gets up to that price, I'll evaluate a new entry. So we never got into that trade in Snow. What we're going to do now is we're going to work our way over into the 5 stocks that I think have the best potential, where they're not overextended. And we should, in my opinion, what I'm going to be looking for, see follow through for the week of June 28th. So let's head on over to the stocks and we'll take a look at all 5. We'll rapid fire go through them. The first one is FSLY, Fastly. You can see that it actually had what most technical traders would know as a ascending wedge. We broke out of the ascending wedge and we're looking for 72 to be the target that I'm looking for this week. One that got beat up a little bit that seems to be recovering is IBM. IBM basically trading in a 5-day, 6-day pause, for lack of a better way of putting it. I'm looking for this to bounce up and trade through 152. Next, as we just mentioned, the one solar stock that's at the top of my list, which you can see has broke the longer-term downtrend, is Sunrun Inc. I am looking for this. Now, this is where I want to be very clear, specifically on this one, because this is the entry that I'm looking for. I'm looking for it to get above 56.50. If it doesn't get above 56.50, I'm not doing anything. There's no trade there for me. So again, knowing your levels, knowing what it normally does, knowing your risk reward, knowing the order flow that gives us the probability for follow through. So Sunrun above 56.50 is what I'm looking for. And the last 2 that are on the top of my radar this week, Costco, comfortably pausing. And you can see here, the last time it got up to this price level, it paused. Saw some selling come in, obviously a different time. And you can see where we are right now. We are pausing in Costco right at all-time highs for 3 days. And finally, the one energy stock I am going to be looking at, because it was the leader when earnings came out, is Hess. Now, this is another important point here. I like Hess. I want to be long Hess this week. I want to be a buyer. For me personally, it needs to trade above 91.50 because it got up there and failed. Got up to 91 and failed. Got up to 91 and failed. I want to see it punch through 91.50 with what I call an energy candlestick. Punch through there with increased volume, close on the highs, and close above that level. And then I'll evaluate to put on a new trade through that level. And then through that level, I am looking at for at least a $10 move through that. And then I'll put that trade on. Okay. We covered a lot today. 24-minute video. I really appreciate it. If you haven't already, please click down and subscribe. Give us a thumbs up if you find this kind of stuff helpful. But even more importantly, we covered what you believe are the common obstacles to succeeding as a trader. Let me know yours. If one of those happen to not be yours, leave a comment below. I'd love to hear from you. Let me know why you believe you're not further along. What's missing? What's confusing? What's the roadblock that you believe that you're not achieving? And then we're going to have a longer term official online trading, a webinar sometime within the next 10 days. And also, that's another reason to subscribe so you don't miss the sign up. So thank you so much. This is the game plan for the week of June 28th to finish off the month of June, which has been a really good trading month. If you didn't have a good month, click down the link below the video, see what we do. We had a really good exciting month of trading. It was hard work. We had to put on our overalls, but it was a good month of trading. I'd love to see you on the other side in our private community in Discord. So have an awesome day. Thank you so much for joining me today, and I'll speak to you soon. Take care now.